Welcome back to the deep dive. Today, we're going to take a deep dive into KFin Technologies Limited. They're kind of a big deal in the financial tech world.
Definitely a company to watch.
Yeah, and they just released their Q2 FY25 investor presentation and fact sheet.
Right.
Plus their financial results, all kinds of goodies in there.
Lots to unpack.
Yeah, and some interesting stuff in there too.
Yep.
There's like this whole legal situation.
Wow.
Kind of makes you scratch your head how it even happened.
I'm intrigued already.
But, first let's focus on the good stuff.
Okay, sounds good.
KFin Tech, they're on a roll, like seriously strong growth across different parts of their business.
I've been keeping an eye on them. Their international expansion is pretty impressive.
Yeah, and speaking of impressive, their revenue jumped up, like a lot.
How much are we talking?
34.2% year over year. So they ended up at $2,804.7 million for Q2 FY25.
Wow, that's not just growth. That's sprinting ahead.
Right, and it's not like a one-time thing either. This is part of a pattern.
So it's sustainable? That's good.
Yeah, they've got this diverse business model that seems to be working really well for them.
What's the secret sauce? What are they doing that's different?
Well, they're serving, asset managers, the companies that issue stock, everyday investors, all kinds of folks.
Smart, covering all their bases.
And across different asset classes, too. So they're not putting all their eggs in one basket.
Diversification, always a good strategy.
Now, their profit after tax, or P2E, that's growing even faster, actually.
Even faster than 34%. That's hard to beat.
Yeah, it's up by like 50.3%. Can you believe that?
Seriously. Okay, now I'm really paying attention.
And that puts them at $1,573.9 million for the first half of the fiscal year.
All right, so for anyone thinking about investing in KFin Tech, this has got to be good news.
Definitely something to consider, but it's not just the profit growth. It's their profit margins, too. They're getting bigger.
Oh, that's interesting. So they're getting more efficient.
Exactly. And they hit 31.8% in Q2. Pretty impressive, right?
Yeah, definitely a sign of a company that's on the upswing.
So with all the success, are they like the top dog in the financial tech world?
I think it's more nuanced than that.
True.
Let's dig into how they're achieving this growth, because it's not just one thing.
Right, they're not a one-trick pony.
Yeah, they're spread across domestic, international, and alternative investments. Very strategic.
So let's start with what they're known for, domestic mutual fund investor solutions.
Okay, yeah, they're huge in India's mutual fund market.
Right, and their assets under management, that's basically the total value of all the mutual funds they handle, well, that's up by 44.6% year over year.
Wow, they're managing a lot of money.
They are, and that growth is faster than the industry average, so they're outpacing the competition.
That's impressive. Shows they're doing something right.
Now, switching gears to their issuer solutions.
Okay, what's happening there?
They brought on a ton of new clients this quarter, like 358 new corporate clients.
Wow, are we talking big names?
Huge names. Almost half of the NSE 500 companies are trusting KFin Tech.
That's a vote of confidence for sure.
Yeah, companies like NTPC Green Energy and Hexaware Technologies, they're all on board.
All right, so we've got domestic mutual funds, issuer solutions. What's next?
International investor solutions. And hold on tight, because this is where it gets exciting.
Lay it on me.
Their revenue from international stuff is up 44% year over year.
Keeping pace with the overall growth, that's good.
Yeah, and they just got approval from the Reserve Bank of India to set up in Thailand.
Interesting, expanding their reach.
Yeah, plus they're making deals in Malaysia and the Philippines.
Wow, they're going global in a big way.
But wait, there's more. Their other investor solutions segment that includes their alternative investment funds, those are seeing crazy growth too.
Alternative investments, that's a hot area right now.
It is, and their assets under management, they're up 55.1%. They're at $1.3 trillion.
It's a lot of zeros.
It is, and they just launched this cool new platform called Empower Wealth.
What's that all about?
It's aimed at global wealth managers, gives them all these fancy tools.
Sounds like they're staying out of the curve.
They are, but now for the plot twist.
Uh-oh, I knew there had to be a catch.
There's this legal situation involving an escrow account.
Escrow account, that sounds complicated.
It is, and it's mentioned in both the financial results and the review reports. Kind of hard to miss.
So what happened?
Well, KFin Tech found out that there were these unauthorized share transfers from a former client's escrow account.
Unauthorized, so someone was up to no good.
Yeah, and get this, these transfers happened way back in 2018, before KFin Tech was even structured the way it is now.
So this goes way back, before the current management even.
Exactly. It was during their merger with Carvey Computershare Private Limited.
Mergers. Always a chance for things to slip through the cracks.
So we're talking about 12,294,489 shares moved without permission from a client they were managing before 2021.
That's a lot of shares. This isn't small potatoes.
Nope, and the interesting part is how KFin decided to handle it.
Let me guess. They tried to sweep it under the rug.
Actually, no, they basically said, we're going to replace those shares and cover any losses for the client, even though it technically happened before their time.
Wow, taking responsibility even though they didn't have to?
They're calling it acting in good faith, no fault. Pretty admirable, right?
Yeah, that's a bold move.
And they even mentioned a $300 million reduction in something called redeemable preference shares. Plus, they've set aside $81.34 million just in case there are more claims.
So they're preparing for the worst-case scenario. Smart.
Yeah, and all of that's as of September 30th, 2024, so this is a developing story.
Definitely something to keep an eye on.
KFin is planning to try to recover the funds from the people involved, including some minority shareholders.
Makes sense. They can't just let it go.
This whole situation adds another layer to the KFin story.
For sure. Makes you think.
It does. Like, what does this say about their values as a company? Does it make them seem more trustworthy, or does it raise concerns?
Yeah, it's a tough one. Could go either way.
It's definitely a puzzle. Let's see what other clues we can find as we keep digging into KFin performance.
Sounds like a plan. I'm ready to dive deeper. All right, let's really get into the numbers, like down to the nuts and bolts.
Okay, sounds good. Where do we start?
Let's look at their consolidated income statement. It shows us all the different parts of their business.
And how they all contribute to the bottom line, right?
Exactly. It's like a financial map of the company.
All right, let's see what this map tells us. Anything jump out at you right away?
Well, their domestic mutual fund investor solutions segment, that's clearly their biggest moneymaker, brought in $1,963.3 million in Q2 FY25.
Wow, that's a big chunk of change.
Yeah, and it's a 39.4% jump year over year. Pretty impressive.
Almost 40% growth. That's huge. No wonder they're so focused on this part of their business.
Exactly. It's clearly working for them.
So what about their issuer solutions segment? How'd they do?
Not too shabby. They generated $367.4 million, a respectable 26.2% increase year over year.
Solid growth, but what about their international ambitions? How did those segments perform?
International and other investor solutions, they pulled in $321.5 million with a 44% year-over-year growth.
So basically keeping pace with their overall growth.
Exactly. And remember, this includes those alternative investment funds, which are on fire right now.
Right, they're riding that wave.
No, no business can grow without spending money. Got to keep that in mind.
Of course, you got to spend money to make money, right?
That's how it goes. So let's look at their expenses. One big one for any company is employee benefits.
Makes sense, especially in a field like tech. Got to attract the best talent.
Yep, for KFin, employee benefits totaled $1,017.5 million in Q2 FY25.
So that's a 33.9% increase from last year. That's a big jump.
It is, but like you said, the tech industry is super competitive.
You got to offer those competitive salaries and benefits if you want to keep up.
Plus, KFin is investing heavily in technology itself. Got to stay ahead of the curve.
Which all adds up, but the big question is, after all the costs, how profitable are they?
That's the bottom line, right? Well, they're doing pretty well. Their EBITDA margin came in at 45.1% for Q2 FY25.
EBITDA margin, that's basically how profitable they are from their core operations.
Yeah, so it's a good sign that it's so high. It means they're managing their costs well.
And what about their profit after tax margin, the real measure of how much money they're actually making?
That reached 31.8% for the quarter, up from 29.4% in Q2 FY24.
So over 2% more profitable in just a year. They're definitely doing something right.
Yeah, all these numbers, plus their expansion and tech investments, it paints a pretty optimistic picture.
But we can't forget about that escrow account situation. It's still looming out there.
True, true. How do you think it'll play out? Do you think it'll scare off investors?
Tough to say for sure, but I think the fact that they took responsibility, even though they didn't technically have to, that sends a good message.
Yeah, shows they're committed to transparency that's important to finance.
It's refreshing to see a company own up to mistakes. Investors appreciate that.
Definitely, but we'll have to see how it unfolds. Could still have some fallout.
So we've covered the big picture financials and the escrow issue. What else can we learn from these reports?
Let's zoom in a bit, look at some specifics, like their growing market share. They're clearly finding their niche.
Okay, I like where this is going. Tell me more.
One area they're focusing on is mid-sized asset management companies, or AMCs, the ones that specialize in equities.
So companies that manage mutual funds that invest in stocks, that's their sweet spot.
Yeah, they've seen really strong growth in assets under management from those types of AMCs.
Smart. They're finding the areas where they can really excel.
And they're winning new clients in this space, too. Recently landed a big deal with Capital Mind Financial Services.
So they're not just holding on to their existing clients, they're attracting new ones as well.
Exactly. What about their issuer solutions segment? Anything new there?
Well, they're staying ahead of the game by constantly adding new clients and expanding their services. Seems to be working.
They recently got some big mandates, like from NTPC, Green Energy, Hexaware Technologies, even the Leela Hotels Group.
Wow, attracting some big names from different industries. That's impressive.
Shows they've got a good reputation, and they're delivering.
For sure. And they're also making a splash in the main board IPO market.
IPOs, that's where the action is.
It is, and they managed a big chunk of the IPOs in Q2, both in terms of value and the number of companies going public.
So basically, they're becoming the go-to partner for companies wanting to go public. Not a bad place to be.
And don't forget about their global expansion. They're making moves in Southeast Asia.
Right. New clients, that subsidiary in Thailand getting approved, they're on a roll.
It's all very exciting, but with all this expansion, how do they make sure they can actually serve all these different clients?
That's where their tech investments come in, constantly developing new platforms and solutions to streamline everything.
Like that Empower Wealth platform, that sounds like a game changer.
It is, gives global wealth managers access to all sorts of powerful tools, helps them stay competitive.
So they're not just expanding their reach, they're making sure their technology can keep up.
Exactly. Tech is crucial for their success, especially going forward.
All this info gives us a really clear picture of how they operate. Their strategy is pretty clear.
It is, but there's one more thing I want to highlight. It's often overlooked.
Oh, I'm intrigued. Lay it on me.
Their cash flow statement, it shows us how they manage their cash, which is like the lifeblood of any business.
Cash flow is king, you're right. So what does KFinTech's statement tell us?
Well, for the first half of FY25, they generated $1,339.27 million in net cash from their operating activities. That's the money they made from running their business.
So basically, their core operations are healthy, they're generating cash.
Exactly. And that means they're not relying too heavily on borrowing money to fuel their growth, which is always a good sign.
So they're using their own cash to invest in expansion, new tech, acquisitions. Smart.
Very smart. Puts them in a strong financial position to keep chasing those ambitious goals.
This deep dive has been really interesting. They're a company to watch for sure.
I agree. They've got a lot going for them. Strong financials, diverse business model, ambitious expansion, commitment to tech. It's all there.
But we can't forget about that legal challenge. Could still have some impact.
True. We'll have to keep an eye on it. But so far, they seem to be handling it well.
So we've covered their financials, their strategy, their cash flow. Anything else we should consider before we wrap up?
Yeah, remember those big picture questions we talked about earlier?
You mean the ones about their overall performance, how their different segments are doing, and what their future might hold?
Exactly. We've touched on those points, but now that we have all this info, it's worth revisiting them.
Okay, good point. So first up, their overall performance. How would you sum up Q2 FY25?
In a word, impressive. They've kept up their strong revenue growth, and their profit margins are still expanding. They're executing their plan.
And how about the breakdown of their revenue? Any segments that stood out to you?
Their domestic mutual fund investor solutions, that's still their star performer, but we're seeing strong growth in international and other investor solutions as well, especially those alternative investment funds.
Right. Those alternative investments are really paying off.
And their issuer solutions segment is doing well too. No complaints there.
So all in all, a very positive picture, but what about their future? What hints has the management team given us?
Well, they haven't given any specific numbers, but they've hinted at continued growth and expansion, especially internationally and in alternative investments.
So they're feeling confident, and based on their track record, they have every reason to be.
Exactly. They've shown they can deliver.
This deep dive has given us a lot to think about. Any final thoughts for our listeners as they follow KFinTech's journey?
KFinTech is at a crossroads. They have all this momentum, but they're also facing this legal challenge. How they handle this situation, along with their investments and expansion, that's what we need to watch.
And in a world where financial technology is constantly changing, can they keep up with the pace of innovation?
That's the big question, isn't it? Can they adapt and stay ahead of the game?
Yeah, it really makes you think about the big picture. Like, where is all this headed?
Right, like what does KFinTech's story tell us about the future of finance and technology?
Exactly. What are the big trends you're seeing?
Well, first off, There's no question that the demand for tech solutions in finance is just exploding.
Yeah, everyone wants things to be faster, more efficient, and transparent, right?
Absolutely. Investors, asset managers, companies, everyone's looking for an edge. And that's where KFinTech comes in. They're offering that bridge between traditional finance and the digital world.
Yeah, they're kind of like the cool kids on the block, showing everyone how it's done.
And another thing, diversification is becoming more important than ever. Markets are changing so quickly.
Right. Can't put all your eggs in one basket.
Exactly. And KFinTech gets that. They're not just focused on one thing. They're spread across different segments, domestically and globally, that reduces risk and opens up new opportunities.
Smart move. Got to be adaptable these days.
For sure. And then there's their focus on innovation. They're not just sitting back and offering the same old services.
Yeah, they're always pushing the boundaries, developing new platforms and services like that Empower Wealth thing.
Exactly. That's the kind of thinking that keeps companies ahead of the curve. They're not afraid to experiment and try new things.
And it's not just about the tech itself, it's about how they use it to solve real problems for their clients.
Absolutely.
Yeah.
Got to stay relevant. And speaking of relevance, we can't forget about that escrow account situation.
Right. That whole thing really highlights the importance of strong corporate governance and ethics, especially in finance.
It does. And, even though it was a tough situation, the way K FinTech handled it, taking responsibility, acting in good faith, that speaks volumes.
It does. It shows they're committed to transparency and accountability, and that can go a long way in building trust.
Absolutely. Trust is everything in this business.
So even their challenges can teach us something. It's all part of the learning process.
Right? It's how you respond to those challenges that really defines you.
Well, there you have it, folks, a deep dive into KFin Technologies Limited.
They're a fascinating company, really a microcosm of what's happening in the financial technology world right now.
So much growth, so much potential, but also some risks and challenges to navigate.
They're definitely a company to watch. Their journey will be interesting to follow, that's for sure.
Thanks for joining us on this deep dive. Until next time.